Yo, what is up, Wall Street grunts? Right here is going to be a Federal Reserve and a US dollar update just so that we could be all up to speed. So, right now, when we go into Discord, we're going to go under the central banks channel, right? Under Federal Reserves. Like right here is just a rundown on all the Fed members' comments. Like y'all could quickly glimpse through it, but let me just tell y'all so far, see all the members are hawkish. So it seems like every member that we had for the Feds, especially the voters for this year, they all are anticipating a rate hike in March. So so it pretty much the markets is all up to speed and up to date with that, and everyone is probably anticipating March to be the first rate hike of 25 basis points, right? So coming into the U.S. dollar right now, we're starting to see it start rejecting from 96.500, right? So we're not taking this as a devalue of the currency. Like I'm looking at this as just as a pullback from its highs, right? We can't just have candles and price just running straight bullish. So the markets is just U.S. dollar, I'll say, just moving on the risk segment, like risk on and risk off flows, especially with the Maricon variant coming in, and we go based off economic data. So that's what's coming into the market so far. Also, inflation. So pretty much right around, you'll say July, around 90.00, that's when we, around this area marked off with the yellow arrow, that's when we started getting rate hike talks. And ever since then, we've just seen a bullish rally on the dollar. This was all due to the actual increase of the value of the currency when Jerome Powell first started talking about, raising the rates, right? So right now, like looking at the dollar so far, probably can anticipate to get pullbacks around to these levels here, around 94. Yeah, just looking at price action alone, maybe we could come down to here probably if we could get there next month or so, and then we could start trugging up bullish again, heading towards the March next policy decision. So it seems like, everybody is, this is already priced in. So we got this bullish momentum. Like the markets has already priced in everything that the Feds are saying. So they just pretty much just repeating the same shit every time they get a chance to come in topic, right? So right now, the main issue is going to start being inflation and how much inflation is really getting out of control, as we all can see, especially the people that live in America. We see with everyday prices of how goods, wages, everything is just going up, up, and up. So the way they're going to combat that with their tools is raising rates. So we got a few members talking about raising rates three, four rate hikes this year as a possibility if they cannot see a decline in inflation. But if they start to see inflation and starts to be in control, there's a possibility that there could just be two rate hikes, depending on. So the rate hikes is really going to be dependent on how bad or how good inflation is going to turn out. So we all know that how inflation is positive for commodities. So, looking at gold, we can see how gold is still chugging bullish all through the high of inflation. Let me go back to the overall commodities chart. We're looking at copper, silver, we got iron, oil. You see how prices all rise when it came to the increase of inflation. And now looking at equities, like we all know equities is overall going to be bullish. They're going to find ways to keep the equity markets, especially US equity markets, bullish as it possibly can. We all know that the drop so far over here came due to the COVID virus. When it first impacted the market, this was just an initial reaction due to fear. This up move ever since we got, this up move so far, it all been through the stimulus of the Federal Reserve stimulating the economy. That's just a quicker way to put it. So now, we're going to start seeing price equities is going to probably range at these highs just because, the tapering process is due to end in March. So equities is I'm not expecting, like equities to take a dramatic drop, right? So we're gonna just look at these moves as potential pullbacks to certain areas, especially, when the tapering process completes. Probably gonna get like some sort of a pullback coming down, probably to, like just look at support levels on higher time frames just to get a good idea of where you could expect price to come down to. So like 34, you would say like 3400, yeah, like around this area right here. uh, you'll say that this is look like a nice support area. Like if price come and retest this area, it has to be due to some sort of catalyst to get this drop to come down here and then hold this area, and then probably could continue to bull run, right? I'm not expecting equities to drop drastically due to the tapering complete and the rise of interest rates, because the whole purpose of what they did, right, was pretty much to make equities as bullish as possible to protect, companies, banks, et cetera, et cetera. Everybody's investments is in equities. So whatever pullback is down to happen for equities is not going to be severe where it's going to cause massive panic. You might get a sell-off, could probably have a few red days or a few red weeks, but just look at, in a higher time frame for potential pullbacks just to continue the bullish run. And yeah, just going back to the dollar, right? We're just looking at the dollar index now, but pretty much EU, AU, GU is just all flipped. So it's just vice versa. So if we expecting dollar to be bullish, a good pair to pair it against is like euro, since they're negative and dovish with their central bank policies, or compare a strong bullish hawkish Fed against another currency that's pretty much dovish or neutral, where this dollar rise when it gains a lot of strength, and the other currencies like EU, the drop will be pretty massive. So as of right now, like I'm gonna just go back looking at the, like you could look at the monthly here too. See, we got like 2 previous months of bearish movement, and like we could probably look for a retest right here. If we could continue to get a bearish dollar, this will be like a nice spot. I'm gonna start looking for a change of direction, as we could look at candles to the left and just look at how, price could react at these levels and get the continuation up. So I'm still hawkish on the dollar, especially like going back at all the Fed members is looking to increase the value of the US currency, and also as safe haven measures. So like when the markets is in risk off, we expect dollar to be bullish. Economic data is looking to rebound and do better. We're expecting dollar to continue to do its bull run, right? So right now it's just due inflation is the main concern right now. So let's just see how they're going to combat inflation. More talks with the feds throughout the weeks next month, especially February. Let's see how their tones, if their tone is still going to remain the same. Also, employment. Employment is major right now for the Federal Reserve. If max employment remains, just people still working jobs, that's what's going to help them continue the process of ending the stimulus, ending help. Like they're going to end the help of helping the government, right? Because people is going back to work, people's going back to their normal lives. So if the virus would have made a major concern to employment, then they probably would have procrastinated and prolonged the ending of the QE. But right now, if unemployment continues to decline, it's going to be a good sight. And then the Feds is not going to have no reason to not taper in their next meeting. So let's pay attention to employment. And every time I see anything with employment data coming up, I would update everybody in the group so we're all up to date. All right, have a good one, y'all. I hope this helps.